Hello, everyone, and welcome back to HUBB Live Trading Room with Rob Roy. We might have just saw a lot of you in the EWO Trader Live session, so if so, welcome back. Great to be back with you all. I'll be introducing Rob here in just a few moments. Today, we're going to be going through the software, trying to find some trades and utilizing all of the functionality that the new platform has to offer. We do have to cover our disclosure disclaimer agreement for all of our live webinars or events. Essentially, the main thing to take away from that is that we are not licensed investment advisors in the United States. So nothing is to be taken as personal investment advice. Other than that, let's get right into it. Robbie, out there?
I'm here. Yeah, long time no see, Zach. And for some of you, agree to what Zach said. We were with you just hour and a half ago. So welcome back. And as Zach mentioned, just wanted to give you a brief rundown on this is the HUBB Live Trading Room. The first couple of sessions we spent, I know the software was new for everyone. You don't have to tell me about using a new piece of software. Old dogs take a long time for new tricks. All those famous cliches, I'm a creature of habit, and all those kind of things. So I get it. I understand when you're using a new piece of software that it takes time to get used to it, figure out where everything is. I can tell you that once you spend time going through it and become more familiar with the usability, you're going to love it, because I really do too. And that's saying something for anyone that knows me personally, with the fact that I'm such a creature of habit. So we spent the first couple of sessions here in the HUBB Live Trading Room really going through functionality, things that I use the software for. You have Mike Wade that's doing these as well, and he shows you what he utilizes. So there's multiple opportunities to figure out the usability. But the main purpose of the HUBB Live Trading Room is how to use the software to find trades. So we're going to start to morph into that. Now, if you do have a question or two on functionality, we'll try to get to that as well. We don't want to ignore those altogether, because, again, I know it takes time. But just as a quick reminder, there are the videos from the past couple of weeks that are recorded on the platform. You can go back and see those in the community part of the software. So if you're joining us for the first time, or you're just starting to use it, there are recorded videos with some of the functionality features there. So with that, let's go ahead and get into how to use the software to find trades. Now, I mentioned during the EWO Trader Live that there are a number of scores. So you come over here, click the AI button that are above our 75 threshold. In fact, we go all the way down to KTOS. And you may have already seen that there's been a couple of new alerts that have been sent out in between the EWO Trader Live and this session. So I thought I would go through and talk about those. I also mentioned during the EWO Trader Live this symbol here on FAS. So we'll talk about that one as well. And we have not sent out the alert on that yet, but I'm watching it very closely. The spreads are a little bit wide. Let's just click on that one right now and start there, since I did kind of tease that one earlier. You can see on the DMI, and I like to have the DMI confirming on these alerts. And just to let you know, you may have seen the slide on the presentation that JP and Tom Gentile did, the session that I did with JP, and he's shown the slide to where the AI Impulse portfolio has slightly outperformed just the AI in general. And that's because of the couple of things that we add in there for further confirmation, in addition to the fact that it always wait for that symbol to be hit, or that signal or target price to be hit. If we get a vertical move with an IV infusion, we're likely to take that off, even if we haven't hit the actual target yet. So, when you got an 83% score like we have here on FAS, very high probability that we're going to go up and hit that. But if we were to continue vertically, then we wouldn't necessarily wait for that. So if I type in, because that's going to be the signal from last night, if we type it in currently, now you can see what's going on with it. And you can see this has been the hesitation from this morning as we moved up again this morning. And now we have more separation from the 10-day moving average. The spreads on this, the options that I'm looking at, and remember that we have this option functionality that's not really ready for prime time yet, but very soon you're going to have access to this, and we're going to have all kinds of different really cool things that you can do with the options feature on here. And just refresh it, see if we can get the options to show up here. If not, I will tell you that with FAS, the signal that we're looking for is the Jan 150 strikes are the ones that I've honed in on. Now it is January, so it's a little bit out there in time. 423 open contracts as we exist right now. And the spread's 30 cents wide. So it's 440 by 470 at this moment. And when we look at that spread, if you're wondering, well, what size spread is too wide? I go by the rule of 10%. So let's say the option price is $4. Then that means you don't want the spread to be more than 40 cents wide. If it's more than 40 cents wide, that's too wide. And when you see a spread that's too wide, you don't necessarily want to put that position on because you're giving away too much in the realm of slippage. So here's the listing. And if we come down, there's the options. So I mentioned that we're in the Jans. So we'll click on the Jans and then we'll give ourselves more strikes so that we can get down to those Jan 150s. And so we'll probably need to go down here to 18 and scroll down. And there you see, there's the 440 by 470. So you can see you're getting the live prices. And there's the 423 open contracts that exist now. Now it's had activity today. I don't know if some of you have already jumped the gun and already put the trade on before I sent out the alert. Perhaps you did. Perhaps those are people from EWO Trader Live, but you can see other people are actually trading this strike today. So 30 cents wide on 440 is within the realm. I was hoping maybe that spread might tighten up a little bit, but you can see the 145 as a 30 cent wide spread, the 155 as a 30 cent wide spread. So we're probably not going to do any better than 30 cents, which means 460 is probably the likely fill price that you would get here. With 423 contracts, we may not be able to split it right in the middle, but click on that and the long call over here. And then you can see where it's going to give you the ask price. So it's going to default to bid and ask. And then, the functionality here, I've shown it to you before where you can spread these out. So I was just waiting to see if maybe there is a little more flattening. I didn't like the fact that it opened so high this morning. So I'm going to go ahead and take the options off. You can see we were up here and they spiked that volatility. Now we're trading back down near where the open was, away from the high that took off right off the bat. And then when I add on the moving averages, you can see that we're still just a bit overbought. The only reason for the waiting or hesitation on this is perhaps we come down and test that 120 level. Maybe we don't. I'm going to go ahead and make those symbols on the side a bit bigger so that you can see the pricing over here on the right-hand column. And just kind of monitoring this one. Don't want to wait too long and miss the move altogether. Sometimes maybe you get a little too cute on getting the entries. But when we look at the chart, and if we go and look at the intraday chart, you'll be able to see what I've been watching with the 3-minute chart. See that open that I was talking about? You don't want to chase that. That's, a tip that works whether or not you're dealing with AI or any other aspect. And there's the 5-wave pattern. Notice that it looks like we might be getting towards a pretty good entry point. So perhaps right after we finish this broadcast, this one might come out. It's going dead sideways here after finding the bottom. But the main thing that I wanted to point out, and this is what I was referring to when we had the EWO Trader Live, is you don't want to chase that stuff at the open. Obviously, it pulled back, so it was taking off. It gapped up. we haven't quite filled the gap from the open. Maybe we don't do that. But when you have a gap up and then it takes off and runs, they are definitely pumping IV into those options, and it's settled down. They actually were over $5 at one point earlier this morning. So now we're down to 440 to 470. So the patience, at least at this point, has paid off. I'm still a little bit concerned, as I mentioned during Ewo Trader Live, with the fact that it's one of these multiples, the 3 times. And when you have that kind of leverage, they're using futures. So that's why I'm being a little more sensitive on the entry alert if it indeed does go out, because you just got to time it. Timing in world of options is important anyway, right? Getting the price direction right is one thing, but in the world of trading options, you have to get the timing right within a reasonable degree. And so this fact that we've come back down and now we're going sideways a bit is ideal as far as bringing the price back down. So noting that we're probably going to have to pay $460 to get into these, we're going to just kind of watch this, hope it doesn't take off again while we're doing this show, and then likely send this alert out right afterwards. But I just thought it plays in perfectly to what I was talking to you about regarding this alert during the Ewo Trader Live. That's why we didn't chase it at the open. It's certainly really easy to want to go after one that has a score that high, but you just patience. I use that word so often, but it's so important. And even with the fact that we have calmed down quite a bit from the open, we still are a little bit above the 10-day moving average. So we might have, even if we send this alert out right after this show, we still have the possibility that we come down here and test 120. We'll just have to deal with that if it happens. But we certainly didn't want to chase that opening run. So I thought that was a really good example of exercising patience on your entries. I know you all are getting these signals if you're in the Founders Program and you're seeing the AI signals, et cetera. And so that's what this show is about, is to help you maximize the use of it. Because again, there's so much more towards trading than just charts and scores and all the things that we've hyped about the AI and how it is improving our trading. It's improved my trading, as y'all know, and just so excited about it and can't wait for the future. As JP mentioned during the show that he and I did last week, it is true AI. It learns from itself. And so it's just going to get better and better and better as the months and years go on, as it takes these signals and figures out what worked, what didn't work. And so it learns from that. And the future is so bright. It's such a cliche statement, but it really is. And for those of you that did take advantage of the founder special, kudos to you. Congratulations. You're in the right place. And just taking a promotional minute here, but AI is where the world's going to go in technical analysis. I'm 100% convinced of that. And utilizing this HUBB software, having LE Wave options with a relationship with HUBB. One of the fewer times I was actually just having this conversation with Zach a couple of days ago that I've never considered myself a visionary. I'm always, wait for the proof. Just I learned that from my dad, is just wait till everything is proven to you. And this is one of the few times that I actually took a little bit of a leap here on where the future is going, rather than just living in the present so much. And we're out in front. I don't know of another service such as this relationship between LE Wave Options and HUBB that has the track record that we have, or the amount of time doing this. But it's going to change, and there's other ones going to come along. But the first to the party is always got an advantage. So we are moving up just a little bit. Let's hope that doesn't take off and run before we get done with this. So let's go back and take a look at the ones that we did send out alerts on, because I'm really happy about those as well. So this is on HUBB dividend, and if I put on the ADX, so wanted you see the target, and the score here is 84. So the score is high too. It's nice having all these. Look at that DMI. Just really as solid of a DMI as you could ask for. The ADX is broken above both 20 and 25. So whether you're more aggressive on the ADX, as I am, breaking above 20, or more conservative, as the documentation on DMI would say, wait for it to go above 25. I just think too much is missed between 20 and 25. And if you literally break above 25, the likelihood is that you're not going to roll over, but you have to at least break above 20. So we have the positive directional indicator going up, the negative going down. And when we take a look at this, let me see if this is today, or I'll go back. So that's Friday. So let's bring this up currently. And you'll see that the fact that we're in, you won't see that on the screen, but the fact that we're in a sector that I feel like is going to do well. So look what's happening with the DMI today. So remember how I've always mentioned that the two directional indicators are more responsive to day-to-day movements? You can see that clearly on how the positive directional indicator is higher and the negative is lower from where we were on the AI signal that came in last night. So we're moving to the upside. We're in a wave 3. In addition to this, which I did put this in the, I'm just going to do it live for you here, but I did put this in the graphic on the alert that was sent out. We have a zigzag pattern to the upside, and those targets are almost identical. The C wave extension is almost exactly where the AI target is. So I like a lot about this. I like the zigzag in here. I like where the B wave is, right around that 61.8% level. I like the sector that this is in. This goes back to, so I'm going to switch away from the AI for a moment. And if you didn't see the EWO Trader Live, I want to show you the chart of the Dow, which is breaking out. A lot of stocks within the Dow pay dividends, and we're getting a nice little breakout of this triangle in the Dow. So if there's a little bit of concern from moving into safer havens, safer sectors, as we move towards those rate cuts and whatever happens with that in the election, whether it's a buy the rumor, sell the news or not, you can see that we have a pretty well set up DMI on the Dow as well, much better than the S&P. If you remember, the S&P doesn't have a DMI that looks anything like that. In fact, the ADX is moving down still on the S&P. So all these things play in when you're deciding which of the alerts to use, in addition to the fact that some of those just don't have any options, which is frustrating. I'll bring some of those up here in just a moment. So the fact that dividends are kind of a big thing in the Dow, and the SCHD is dividend equities from the Schwab standpoint, that makes a lot of sense to me as far as putting on a potential alert. So that's why that one went out. And then there's a couple other ones. We can come down here to KTOS, and you may wonder, why in the world is that one when you've got these ones up here? Well, KIE really doesn't have any options. So we look at KTOS, and if I bring that up, look at defense and security solutions. Do you think we're going to need those regardless of what goes on in the market in the world? I think you would agree that we do. And we did have a little bit of a break today following that move to the upside. So we're kind of consolidating here a little bit, letting that 10-day moving average catch up with today's movement. And so this one, I think, makes a lot of sense. You may note that we chose slightly in the money options. And there's a couple of reasons for that. One, it's not that much of a move. That's still forecast to go. And the other reason is we're looking for where the best liquidity is in the options. So here's the option chain. Now, the issue with this one is to get any sort of liquidity, we went with shorter term options. And so we're going to keep a very close eye on this to see where we go in the world of timing on sending these alerts out. So slightly different viewpoints on. I still prefer out of the money options the majority of the time, especially when you have a decent run. But when you have these shorter runs, and especially when you're have a little more constraints on the amount of time to put the trades on, then it's important to try to maximize both the open interest and the delta for the movements when you see those type of scenarios setting up. So that's the 76 score there. But the fact that we're trading up here, breaking above resistance, it doesn't really have a zigzag in it here, but we did break out of a triangle right here. And all kinds of things to look at. Just don't get sold totally on the scores and just blindly put anything that has a decent score on there. You got to be careful on the open interest so that you don't give away all the gain with slippage between the spreads. But we're consolidating right here at that resistance, and with the score here, I think we can move higher here as well. So FAS is the one that we'll keep an eye on. It has pulled back just a little bit. We can go back and look at that intraday chart. So at least for now, it hasn't taken off and run away from us. So go back and look at the the DMI is forming really well. And just, if we're too careful with it, then we're too careful with it. And if we miss it, but so far we haven't. It looks really good. And we're hanging in there right above all the major moving averages on the 3-minute chart, which is what I'm showing you now. And we can go back here and you can see this consolidation. So at least for now, the patience that we exercised this morning has worked out extremely well. Now, when we look at this KIE one, there's no options here. We do still have CB, Chubb, which is in the space, the insurance space. It took off and ran this morning. It pulled back. And at this point in time, it's basically flat on the day. So we do have a footprint in here. We're waiting on CB to take off and go and do what it's supposed to do. PM, maybe we took that one off a day early. Just switch over here and come back and show you Philip Morris. We had this nice run. We got to the point of where we should have gone with the breakout of the triangle, and then off we go again. So, that's the way it goes sometimes. You also have the ADX just in the stratosphere, really, as far as the DMI goes. And then we're trying to see if we can't find something in this world of the Russell. We have IWD, which is the Russell 1000 value ETF, and then we have the Russell Mid Cap. So you can see that there's some activity going on both of these, and yet there's a little bit of struggle here with the options. So let's go with IWD and see what the options look like here. And just would be nice to see that I'm probably showing you stuff that I shouldn't be showing you yet with the options. So we'll reload the platform here. The option functionality is in beta form. So, you can see a few of the issues that are going on. That's what happens when you're in beta. But I think you can see the excitement that's coming out with the future of what we have here with the options functionality. It's going to be in the next release, so it's soon to come. Let's widen the strikes. Go out here to 18 strikes and see if we can't find. And we're not getting the extra months yet, but we look for long call. See if we can get the extra strikes to show up. And they're constantly working on this too. So it's only showing us the November options, but I can tell you that look right here, you see the problem, right? Open interest, zeros across the board. So that's a problem. And that's what we're dealing with those two that are higher scores. Now, does zero open interest mean you can't trade it? No, doesn't mean that it's a no-go. But what it does mean when you're looking at these spreads, so 390 to 420, if you wanted to trade that 186 15 November strike, you're probably not splitting that spread at all. You're not even going to get in at 410. You're going to pay 420 and you're trading against the market makers. So what happens when you're trading against the market makers, and just remember the rules that market makers get paid for filling orders. They make the spread. That's how they get paid. And they don't like to hold positions. So they don't want to be on the other side of the position. They will go ahead and spread their risk off as soon as they take a position. And if there's no open interest and you're only trading against them, you're going to pay the ask and you're going to sell the bid. There's no such thing as trading in the mid price or even, just leaning towards the ask when you're buying an option from the mid price. You're just not going to get filled in the middle. You're going to pay 420 and sell at 390. So that's 60-cent round trip. And that oftentimes 60-cent gain in an option is the profit, right? I mean, we've closed out plenty of positions with less than 60 cents of a gain in the option. So that's why the open interest is so important, so that you don't just give away all of your potential profits. So that means that looking at this could continue to move higher, and that option could go up 60 cents and we break even. So that just doesn't, it's not feasible. And that's the problem when you just get so excited about these high scores, but there's not options to trade. Sometimes when you see something like this that shows up, you can keep an eye on it. And over time, some more liquidity will come in. We do like to have 100 contracts, but especially when we've grown as large as we have at LA Wave Options, the more we grow, the more people we have trying to put on the same alerts. So the open interest becomes more important. Back in day one in January 2018, when we didn't have a whole lot of subscribers, we could do something with 50 or 60 contracts. And just with a handful of people, we could actually be okay on getting reasonable fills without having to worry about trading against the market makers. But when you have more people and more people trying to get in, you need more open interest so that you don't have some of your subscribers trading against the market makers. And yeah, even going out to December on the IWD, the most we can get is 86 contracts on the December 200s. It's 20 cents wide, but it's only a 17 delta. So to try to get anything above a 17 delta, you're going down to 5 contracts or no contracts, and it just doesn't work out. So sometimes when we see something along these lines, when you're seeing the Russell having 2 high scores, you could come back, and this would have to go, if we did something like this would have to go likely into the speculative portfolio, because you can try to substitute something with the Russell that has a little bit more liquidity in the options to give you an opportunity to put on a trade. But it's not the exact thing that because that's, it's the Russell 1000 that the scores have been on, and this is the Russell 2000. And even if you look at the IWN, the Russell 2000 value, there's nothing there. You could go to the IWM, but that's not exactly what we've been seeing here. If you go to the IWM, well, then you find some more liquidity, probably enough to actually put on a trade. But that's not the Russell value, which is what we're trying to see here on these. So we'll look around and see if there's, because the Russell 1000 value. You see that's what the signal is. So we will look for any alternatives here to see if we can substitute something that might work with some liquidity. But with these, I mean, you certainly have the opportunity if you choose. And well, if you have a super large account, you can just buy the security itself. But if you want to trade options, you need to find something that's a reasonable substitute to that that has liquidity. These just don't. So these top three, KIE, IWD, and IWR, even though they're 85 scores or above and have a very high likelihood of occurring, it doesn't matter if you're giving away all of the profit from the spread, which they call slippage, which is the difference between what you pay from the ask and the bid, or the mid price if you can get fill. But again, you're not getting a mid price fill when you don't have any open interest. The market makers aren't going to give it to you. They're going to make you pay the ask. They have to take that. That's part of their rules. When they get paid for creating and filling orders, the office side of that is that if somebody puts in an order at the ask, they have to fill it. So it's a trade-off for them, and that's why they're not going to give you a break if they're putting on something they have to take. So that's kind of giving you a little bit of a tidbit, a little bit of an idea of what we're going to be doing during this live trading session here, HUBB Live Trading, going through the AI list, talking through the trade ideas, why certain ones are selected, because that's a question that comes up all the time. Why didn't you pick this one? Why did you pick that one? And I just want to share with you all of the factors that go into the decision making of which ones are selected for alerts and which ones are passed, even though you look at those scores and you see KIE up there at an 87.5 score, and you're like, I want that one bad. Well, you're going to pay for it, and you might not be able to make a gain out of it, even if it goes up and does what it's supposed to do, because it's at 55.14. Let's see where it is today. The target is only at 57 and change. And so you can see that on the high of the day, we got up to what? We're almost there. So there's not a whole lot, 55.70. So you got 2 more points to go. And with the way options work, you could give all that away in the spread. So hopefully you found this informative on the selection process. And that's what we're going to be doing moving forward. So Zach, if there's any questions real quick, happy to take them. Hopefully I covered the questions on the alerts that were selected, the FAS that we're still watching. If there's a functionality question or two, maybe we can work that in. Otherwise, I'm going to get back to trading.
Yeah, no worries. I'm just going to pass through these 2 questions for you, and then we'll let everyone get back to the markets. I know Jeff Beamer has a show coming up here at 2, so we want to ensure he's got time for that one. Maria here says, when I went to buy FAS stock, I received this message from Schwab. Investing in leverage and inverse ETPs involves heightened risk and is not appropriate for most investors, and that isn't meant to be held overnight. Can you expand on this?
Exactly what I was talking about. They are leveraged, and the leverage comes from futures. So the general thought that's just a blanket thing, by the way, and the brokers send out these things that scare the heck out of you. But it's a standard thing. The leverage comes from the fact that they add futures contracts into it. So that's how they can give you 3 times. There's, great leverage in options. In futures. And so most people that trade futures trade intraday. Very, very few people hold futures overnight because of the risk. They're highly leveraged. They can move like crazy. You can be in a profit, go to bed, wake up at a massive loss. So that's where that not meant to be held overnight comes from, is the futures aspect that creates the leverage. So you've heard me, exercising caution about this. And oftentimes we don't do these because of that. But that's where the statement came from, is the fact that the leverage comes from futures. Most futures traders don't hold futures overnight. You can hold these overnight, but the time decay aspect is a problem. Like, let's say if we came back here and looked at this and you saw this big run up, and then all of a sudden we pull back here. Even though we went back up here, I guarantee you that the options on this at this point were not close to where the options were at this point, even though the price is arguably the same. The move to the downside would have taken out so much of the extrinsic value that you come back up here and you're still at a loss. And then, heaven forbid, you got in here and you had this big move coming back all the way up here once again. If you got in here and there you wouldn't have been the same price, and then here you wouldn't have been the same price, even though you're like, well, you should be back to break even. And you could make a legitimate common sense type argument that, well, the security is back to where it was. These options should be the same price. And I promise you they're not. They're probably not even close. It's probably 40% loss here, even though you're right back up here. So there's a huge premium on these of getting the direction right in a short period of time. And so I've expressed a lot of caution about these things. And that's why we're being so darn picky on whether or not we get into this. I do like the way the DMI is setting up, but we don't want to get in too early and then risk coming back down and then turning and going back up and still being at a loss. So they're tricky, they're difficult. I don't begrudge anyone that says just stay away from them, because in general terms, I say stay away from them. And if it wasn't for the fact that the AI has given us such a good score, we wouldn't even be considering this. We wouldn't even be talking about it. But I can tell you that if we do send out an alert on this and it does start to pull back, you know that I'm pretty patient and I'll hang in there even when a position has a drawdown. You've seen me do it before. I will not do that on these just because of the fact that if it pulls back, even if it turns and goes back up, which I do have confidence that it will at some point, you're still going to be at a loss. So that's one aspect of where I would be a lot quicker to pull the trigger on an exit. So thanks for asking that, Marie. But that's exactly the statement that was sent to you is exactly what I'm talking about as far as the caution on these leveraged ETFs. One more real quick, Zach. I know you guys got to go and get ready for the next one.
Maria says, enjoyed the selection process. Thank you. And we'll wrap up here with Jim's question. How can one tell which is a better strategy on AAP? Rob put an alert out for a calendar spread and Mike Wade did a credit spread.
It's personal preference. Both of those are kind of sideways strategies where time is helpful. So Mike Wade loves credit spreads. He just loves them. It's his favorite strategy, and he puts them on all the time. I like calendar spreads. So it's a personal preference thing, but understand both of them are basically designed for the same thing, to generate a gain over a slow movement with some time, right? It's not the same thing as putting on an AI trade, a directional trade where we're wanting it to move as quick as possible. You want the exact opposite. You want something that's going to go sideways for a while. Either one of those strategies can generate a gain. A credit spread does require margin, which is not really a big deal, other than the word margin tends to scare some people. Calendar spread doesn't require margin. So it's a personal preference thing. That's not really the main reason that I prefer them. I like the fact that there's some flexibility that I feel that a calendar spread has that maybe a credit spread doesn't have, but they're very similar strategies, and it comes down to personal preference. And Mike likes them. He's gotten really good at them. He focuses on them, and I encourage people to do that. Find strategies that you like, and if you like a different strategy than I do, great. I only encourage you to get good at it, understand it inside and out, and you can substitute a credit spread for a calendar spread if you'd like, because the indetermination is the same. All right, Zach, I know we've run late. I know you guys got to go and get ready for the next show. We sure provide you as much information as we can through all these different live events and getting used to the software, and hopefully helping to improve the success of all of our subscribers in the world of trading. Thanks so much again for your time. Look forward to talking again soon. Take care, everybody.